Good morning, trading analysis viewers, YouTube viewers, traders, investors. Hope you guys are doing well this morning. Bennett Tyndall here. It's Fed Day, June 16th. I can't believe we're already half of the way through 2021. This year has gone by extremely fast. It's been an interesting kind of past few weeks in the markets. We've seen a very tight trading range in the indexes. The Nasdaq, we've actually seen some positive signs of rotation back into growth in tech. The S&P, however, I'd say since the beginning of June, has just been in this kind of contracting, almost rising wedge-looking formation. Now, there's been a lot of talk in regards to this upcoming Fed meeting today. We've seen recent upticks in inflation, which Jerome Powell and the Fed continues to assure us is temporary, simply pent-up demand, meeting supply chain constraints as a result of COVID. There are a couple other issues, I think, that are at play. We've seen a lack of people returning to the jobs market, so labor force participation. Looking at the current jobs on offer, there's talks of potential wage inflation. We've got the semiconductor shortage. You know, at the end of the day, there's a lot of difference of opinions. There are many economists who agree with the Fed, and there are others who think that this could be more prolonged and sustainable move. So the best thing we can do is use the hard right edge of the chart, which is often our best forward leading indicator. And, you know, looking at the top growth in tech stocks, many of the index heavyweights, that several of them still in consolidation since last year, several of those names look poised to break to the upside, to resolve higher. Apple, Netflix hasn't seen really a new high since August of last year. Apple's been in consolidation since September of last year. And what's interesting is you take the move in the indexes, the Nasdaq, you take the Smh Semiconductor ETF, all of that does imply an upside resolve in technology and growth. At the same time, I am seeing an interesting wave count in the bond market, which could potentially be indicating to us maybe the bond market is one step ahead of the Fed and perhaps has sniffed out either an early move, which currently the market's pricing in about a 7% chance the Fed moves today, or perhaps they're just looking for some early commentary in regards to a policy shift or change. So we'll see. I continue to stick with the long side of the market. The wave count in the bond market is a little bit concerning. It does appear to be counter trend to the upside in bonds, counter trend to the downside in yields, which could indicate a move back to 1.75%, maybe 2%, even in the 10-year. But future is not written. It's still a very dynamic and ever-changing environment. So before we get to the charts, let's go ahead and bring in the trading analysis team. I am hosting and covering for our fearless leader, Mr. Todd Gordon. He's out this morning. We're giving him some time to get ready. He's got a Series 65 coming up in not too long. So, but yeah, things have been well. Continuing to move towards the wealth management side. Todd's been very busy with that. We've seen some interesting moves in the world of cryptocurrency. We'll have Alex in to talk about that. So let's bring in the team. Good morning, Alex. Good morning, Terry. How are you guys doing?
Good morning, Bennett. Good morning, Alex. Yeah,
What's going on?
We're doing great. Oh, you know, down here it's not even technically summer. We got 3 more days till we hit summer, but man, is it hot. Whew.
I'm just glad we're out of that little tropical 2-month season. It seemed to be a little bit longer than last year. So a lot of rain, a lot of humidity.
Don't hold your breath, because that's going to stick with us here, I think.
You know, when I moved to Texas,
there's some kind of depression down in the Gulf of Mexico trying to build, and probably move north, and it's gonna keep the rain coming.
We'll get round 2. Yeah, I remember when I moved to Texas, everybody said, "Hey, if you don't like the weather, just wait 5 minutes; it will change."
Yeah.
So it's the only place you can experience all 4 seasons in a 24-hour period. So, what's up, Alex? How are you doing today?
Well, nothing much. Big temperatures here as well. They are looking for a pretty hot year. So just waiting for a Fed today. I'm so interested what they're going to say, and will it be some of the notion of some of the potential tapering, or some rates, or everybody will watch a dot plot. So it's going to be fun and interesting.
Yeah, you know, I was talking with somebody last night, and I said, you know, maybe it's something as simple as the majority of the dot plot reflecting perhaps an earlier than expected increase. So I don't know. It's going to be a fun meeting, that's for sure. I'm looking forward to it. What else is new, guys? Anything else? Anything else, Alex, Terry, you guys can think of before we jump into the charts and get ready for Wednesday?
I mean, everybody's got their opinion of which way the market's going to move, but the market itself is the only one that knows what's going to happen for real. So all we can do is be prepared, and I'm going to help you guys out with that here in a little bit with some sector analysis.
Awesome. Awesome. I love it. Yeah, it's the market certainly has kind of felt on hold these past few weeks. We're into summer trading months, which, you know, everybody says summer trading is always really slow. I can show you several years where summer trading was quite adventurous. So we'll see. We'll see what happens. So let's hit it. Let's go ahead and jump in. We do apologize for not having a show last week. I did have something come up. We were unable to get that live event out. We do apologize for that. We want to be always respectful of your time. So, all right, boys, I'm going to jump in, take them through Motive Wave, Hard Right Edge. I'm just going to take them through the S&P, the Nasdaq, yields, bonds, and then I'll be back and we can jump into some sector rotation. Sound good? All right.
Perfect.
See you guys in a couple. So what's up again, YouTube? Good morning. Thank you guys once again for tuning in. Let's jump into it. Hard Right Edge of the Motive Wave platform, one of two primary tools that we utilize here at Trading Analysis. In addition to Motive Wave, we've also been using Optima. Terry has been heading up our journey into the world of Optima, as well as relative rotation graph analysis, and we're very excited to be utilizing that product. And we've got some events lined up later in the summer to kind of introduce you to that tool if you're interested. Okay, so let's start it off here. We're taking a look at the S&P 500, and the chart that I currently have you on is just a 1 hour time frame. First of all, let me take you to a daily chart. And we've had discussions, excuse me. Apologies. We've had discussions recently about the wave count from the COVID lows. It's a little bit choppy. There's several overlapping corrections. It doesn't quite give you the clearly isolated corrections and the well-defined impulsive trend. But what we did pick up on is, let's get back off the daily, and we're going to focus in on the March 4th price action. So we're down to a 195-minute half-day chart. We use the 195 as opposed to the 240-minute 4-hour chart, as 195 minutes is exactly a half-day trading session. So what we've got going on here is off the March 4th low, we had this up in 1, down in 2, put out a public video March 25th calling that as the wave 2 low, looking at that as wave 3. We triangulated here in wave 4, and when we broke out here into the May 7th high, initially it looked potentially like the resumption of this uptrend, but ultimately it proved to be a B wave of a wave 4 flat. We very quickly picked up on that. The wave 4 flat took us into May 12th. On May 12th, we put out a video saying that that 40-50 area was likely a buyable zone in the S&P. And while we have seen this move back to new highs, it's been a little bit lethargic and very difficult to decipher. So this is one of those instances in which you just kind of have to take a step back. I've been very confident in my interpretation of the market up until the post-May 12th move. We had 3 waves up here into the 15th, 3 waves down into the 19th, and we've just kind of had this meandering, now overlapping and contracting, higher lows, lower highs, price action. And I think this is one of those instances where you do just have to take a step back and understand that when the market is not giving you clarity, when it's not giving you an edge, you don't have to figure out, and Todd brought this up a few weeks back, kind of resonated with me. You don't have to figure it out. That's not your job as a trader. Your job as a trader is to, when you have the edge, take advantage of it. So in this instance, we've got an upside fib clustering zone, which we've met this kind of blue shallow, which is your initial fib target. We've seen that met. We haven't quite met the higher degree, or excuse me, the higher upside fibs here near 43.40 to 43.64. Could we get there? I certainly think we could. I think there's a very strong probability that the Fed does nothing today. It reiterates its 2% inflation target, dismisses the inflation, the recent upticks that we've seen in PPI, CPI, PCE as simply temporary and a result of pent-up demand and supply chain constraints. So if that's the case, with the consolidation that we're seeing in tech, I don't think our focus necessarily should be on this S&P count. If the Fed does nothing, sits back, takes a backseat once again to inflation, we've got some very healthy looking tech charts that I think will lead the market, at least lead tech and the Nasdaq out of this recent consolidation. So the rising wedge here indicates to me we could be looking for kind of a near-term pullback to correct this move, and then we see uptrend resumption. So that's the S&P. Let me take you over to the Nasdaq. The Nasdaq, things look a little bit more clear. Over here on our red count, let me walk you through this one. I'm going to take you down, zooming in to price action, essentially from February 16th, where the Nasdaq printed a high, through today. And what we have is off the daily chart, we're going to once again go down to the 195, down on the 195. From Feb 16, you print 3 waves to the downside, excuse me, 3 waves to the upside, which the B wave here took you into a very common fib zone, which is a move back to the origin, which is equality. So you can see that 13,879 lining up with the Feb 16th high. And then the 1272, which is simply a 127.2% external retracement. Those are your 2 most common, or 2 very common B wave objectives in a flat. So 3 down, 3 up. We did get 5 waves down in C. The C wave proved to be between about 61% of the time elapsed in A and short of equality, and about 61% of the magnitude. From there, you can see that price action in the Nasdaq did print and has just about completed 5 waves off the low. You can take a trend line from Feb 16th, draw it through April 15th and April 29th, and you'll notice that has that lines up here with our fib clustering. So here's your zone for wave 5. We've seen 5 waves up. We've seen a move beyond the B wave, so we can no longer look at this as a contracting triangle, meaning A, B, C, D, and E. What's interesting here is the implications of this count is very similar to if this were to be D and E of a triangle. But if we get a pullback, I'm going to be looking for this wave 2 to perhaps take us to trendline support. And if we get 3 waves down there and you continue to see stocks such as Apple bid and Microsoft, then this is a wave 3 that I think is going to present some interesting trading opportunities. Now, what happens if everybody's wrong and the 7% chance that the Fed moves today is it's inaccurate, or maybe we get some shock, some surprise out of the Fed? Is there any count that I see from an Elliott wave point of view that would support a larger correction? And there is, but I want to reiterate the fact that even in this interpretation, we would still be simply looking at this as a wave 1 of a higher degree fifth, which means whatever wave 2, if it comes, would be viable. I've been looking at this as a 5-wave move of the same degree of trend. So I think it is possible. You do have contraction here. Maybe this is an ending diagonal. We get a pullback to trend line support or parallel channel support, and then we resolve higher. The future is unknown. What we can do is take the preferred and the alternate interpretations, have them as plan A and plan B, and await a decisive move out of the markets. The markets have been a little bit quiet. Now, it is worth noting that we're seeing some very bullish underlying flows in the options market. We've even seen a return to interest of call buying as indicated by some of our market internals. So that's the Nasdaq. Let me quickly pop you over to the SMH Semiconductors. SMH also very similar to that of the Nasdaq. Let me just recycle my scale here. So here in the SMH, very similar to that of the NDX off the Feb 16th high, 3 down, 3 up. This is actually 5 down, or you could call this ABCWXY. It doesn't matter. The implications are that wave 4 ended on May 13th. So don't get too hung up with the subdivision. And from there, notice the SMH, very similar to the NDX. Go figure. Post 4th wave triangle potential up into fib clustering. So we've about completed a motive impulsive 5-wave print back to the upside in the Nasdaq, back to the upside in semis. Very similar to the NDX, I'd be looking for a wave 2 pullback, depending on what happens today, I think that's going to be a very viable opportunity. Okay, now over to the TLT, we've got two interpretations here. One that says off of the March highs, you have a move down in A 78.6% retracement in B, and your C wave was simply a measured move of quality. Got a good bounce there, and we're resuming the move back to the upside in bonds, back to the downside in yields. The alternate, and the only reason I continue to track it is due to the very symmetrical nature of the correction. Thus far, price action here off the lows in TLT doesn't quite look motive impulsive or even motive diagonal, meaning it's not trend establishing. So the possibility that this is simply a counter trend three-wave progression, which has a massive clustering of fib offered from 3 degrees of trend. You've got equality between your corrective legs structures, the time elapsed in those corrections. It's a very symmetrical overall correction. That's the 20-year bond ETF. If this counts correct, we could get one more move down in 5 for bonds, another move back up in yields, and then I think the move is likely complete. Over to the 10-year yield, and then we'll let you guys get back out to sector rotation. Here in the 10-year yield, which if you follow me on Twitter, we did a good job of pinpointing the 1.75% resistance back in March. That's since given us a corrective pullback. Let me zoom in here. There's a couple of ways that I've kind of decomposed this move off the top, but what we have is, once again, 3 waves down, 3 waves up. The time elapsed in X was equal to W. 3 waves down in Y, time elapsed in Y was also equal to W. You have 3 degrees of trend. You have C versus A, 4 versus 2, and Y versus W. That's the 10-year yield. And they've been responding from that zone of support. The 30-year yield, also a very similar interpretation. Check it out, guys. March 18th, 3 down, 3 up, equal time in X compared to W, 3 down in Y. You have Y versus W equality, a 38% retracement. C versus A, equality of Y and W, and then wave 4 being 161.8% of time elapsed in 2. I know I just threw a whole lot at you. This count has treated us well, but in the event the Fed dismisses inflation once again and we smash south of the support zone here in yields, I'm just going to dismiss these charts for the time being, dismiss their implications. But they are valid, and I think we should at least be recognizing their validity as we approach this meeting today. All right, one last chart I've got for you is Apple. Take a look at Apple. Just a beautiful, beautiful sideways consolidation. I don't know how you can be bearish tech with such a beautiful triangle such as the one here in Apple. It's really got to get going. We've seen 3 waves up. If this is going to continue, we should see upside resumption soon. All right, that is it from me today. Let's go ahead and jump back over to the team. So what do you guys think?
Certainly looks like you got the stars aligning there, Bennett, but the market is the great humiliator. Just when you think you've got it pegged with every little technical indicator and you know what direction it's going to do, it's going to prove you wrong. So
absolutely, and that's why I'm not acting on that bond count. I'm not acting on it, but I am recognizing.
I like that Apple count. Yeah, I know you and I debated a little bit yesterday on it because I think there's another leg directional move down, but then again you look at the other chart and you say no, it really doesn't have room to do that, but we'll have to see. So I'm all over that Apple chart. I think either we got it's always so hard to call the end of a 4th wave triangle, but we're watching very clearly, and as soon as we see a move up above that D wave high, we know we've got that finished. But and we've got very clear wave count and validation on that C wave low. So we've got a really narrow range we can monitor and just be patient, right? There's no need to be trading every single day, guys, right? So we can be patient and get the best setup. So
yeah, absolutely. And we actually just had a trade on in Apple. We put on a broken wing upside call butterfly centered around the 130 handle. We picked that up around 225 with our members. We sold it for about $1 profit. Just take advantage of that initial move. But if this thing starts going back to the upside, there's some really good upside runway ahead of it there. So, all right, let's Terry, you want to take us through sector focus, and then and then we'll be back. All right, here we go.
Hello, traders. I'm Terry Long at tradinganalysis.com here with your weekly sector focus. Now, starting as usual with last week's performance here of the index and sectors. Hey, Bennett, go ahead and zoom that out. Zoom that out. There we go. This past week, we saw the S&P edge ever so slightly higher and actually touch a new intraday high. So that intraday high last Thursday was set at 42.55. I'm sorry, last Thursday. There's that high. That high last week was 42.48 or thereabouts. So, but look, we inched a little bit higher here on Monday, just ever so barely. The S&P was up 0.41% last week. The Nasdaq did continue moving higher. It moved up 1.65% last week. Now look here at the sector performance last week was kind of a little strange. Healthcare booming. Healthcare up nearly 2%, followed closely here by the real estate sector, which has actually now firmly established itself in our leading quadrant. This is the newest real estate is the newest member we have in our leading quadrant. And technology and consumer discretionary also posted nice gains at 1.39 and 1.27% respectively. But lagging last week were our sector leaders, financials, materials, and industrials. So that was last week. This is Monday and Tuesday's price action, which you can see we hesitantly pushed to new all-time highs here in the S&P. Poked our head above that prior high that we had from back in May 7th. But Monday and Tuesday so far, S&P is just flat. Nasdaq, a bigger rise. Actually, the NDX 100 has posted finally a new intraday high here at 14,129.33. But I think the excitement was short-lived. You got a big pullback yesterday. Both indexes retracted from Monday's rise. The NDX 100 is still up 0.23% for the week. Leading sectors this week. I got a little table hidden behind here, show you what's going on. So again, Monday and Tuesday's price action, we're leading by energy 1.5%. Utilities is up about 0.5%. Here's technology up 0.39. Healthcare kind of neutral here at 0.12. The biggest losers again this week so far still is our materials and financials, our leadership here. So let's move on over here to the sector rotation. Now, financials still is holding the #1 position in terms of relative strength after having overtaken the energy last week. Let's look here at this rotation. Let me tick that back one level there. Here is financials, here is energy. You can see energy pushing further to the west is actually dropped down into the #2 position. And financials both down in the weakening quadrant, moving a little bit left. But what I see here in financials with this turn developing, I see the momentum decline fading, right? So momentum, when we're moving horizontally, that means momentum is steady and stable, and you possibly have the very earliest signs of a hook formation. Indeed, even in energy here, you can see the hook has actually already started here. Now, materials and energy also saw declines last week. Industrials has been showing declining momentum for more than a month now, and it seems that materials is been following the industrials sector around the RRG map. So I do expect that materials, while it remains in the leading quadrant for now, I expect to see some more momentum decay as it follows the industrials down. But this real estate sector here, this one continues to show its dominance as it moves higher up in the list. It actually now surpassed industrials, and possibly it will overtake materials here if it gets another push over to the right. So the industrials has actually penetrated down here into this weakening quadrant. So we got to watch that. this hook, look at this hook here forming in the communications sector. Now, when you get this reverse hook and now you're moving north again, this means you've got increasing momentum. Indeed, last week, the XLC rose 0.78%, and we should be looking for stocks in that sector that may also be hooking north, as they may be the ones that return to market leadership soon. Now, technology is still over here in the lagging quadrant, and its northerly vector does continue to slowly grind northward. XLK did rise 1.39%, like I said. Healthcare is up here in the improving quadrant, showing a northeasterly trend, and that indicates that stocks in this sector are gaining both momentum and relative strength versus the benchmark S&P. Utilities and staples, though, they are in the improving quadrant, and while they are showing some increasing relative strength, their downward vector here indicates that momentum in these particular sectors is fading lower. Now, if I tick this animation over just a bit, I'm going to pick up Monday and Tuesday's price action here. So just take a look here. You can see by adding in Monday and Tuesdays, I see a continued acceleration coming up out of energy, rising momentum back in energy. I see a continued well-defined formation of the hook back in financials. I see a continuation in northerly vector here in communications. And look what happened here. Like I said, real estate overtook materials. And if we hold this week with where we're at here, we've got new sector leadership going on here. It would be financials, energy, and real estate. And energy may actually be toying with financials here a bit, right? So playing back and forth. They're very close on their relative strengths. So, all right. So today I want to share a scan with you, and this scan that I've created, it detects all the stocks that have recently hooked back to the north in either the leading or the weakening quadrant. And this hooking action indicates a rising momentum in stocks whose relative strength ratio is already outperforming the benchmark S&P. Let me go ahead and pull that in. We'll open that up in full screen for you here, and I'll get you a little sort going on. Let me scroll out a bit. So yeah, like I said, the universe of stocks that I used for selection was the S&P 500, and it had to either be in the leading or the weakening quadrant, and it also had to recently have formed a hook. So go ahead and take a screenshot, if you will, and review some of these stocks at your own leisure. You know, just because the markets are waiting for the Fed to provide direction doesn't mean that we cannot be adding to our watch list, looking for those strongest stocks that will be ready to move next. And that is certainly what we've got here. Back to you, Bennett. Bennett, you are muted. Cannot hear you.
Can you hear me now?
Minor details. Hear you now.
Hey, good job. Nice work there, Terry.
Yeah, what do you think of this list here? We're going to have to do something with this because it's quite a large list, actually, that is returning back into seeing rising momentum at this point. And to me, I don't expect to see a lot of stocks like this rising in momentum if the market's ready to just turn tail and dive. So, you know, this is another one of those things that we just have to take in stride and let's set ourselves up for the best plays that we can make in the future.
Absolutely, absolutely. Excellent work there. Yeah, that is an interesting list. I think those are certainly worth exploring. I see some names already of interest on that list now. So, all right, Mr. Alex, sir, you ready to bring us up to speed with a little bit of a macro overview as well as your take on crypto? Just in case you guys are not aware, Alex does have his own live show tomorrow morning, 9 a.m. Eastern on our Trading Analysis YouTube channel. You can go to youtube.com/trading analysis and get subscribed to that. All right, sir, Alex, can you hear us?
Yeah,
what's up,
loud
boss?
and clear.
Hang on, we got to give you the screen here.
All right,
Can you
make
imagine,
presenter.
Bennett? Can you imagine? I cut it myself yesterday on a can, so
You
it's the
cut
worst
yourself
thing ever. On a
was
can.
Was it on one of your fingers? I'm assuming.
No, it's on one of my finger, but I don't know
Yeah.
if you experienced that. It's the worst thing. I mean, it's so annoying.
It's like aluminum cans. Yeah, they can be painful. It's worse than a
Yeah.
paper cut. So,
Yeah.
all right, guys.
You need your tetanus shot.
Yeah, have you had a tetanus in the last 10 years?
No, I don't remember.
So probably not. All right, we just passed through the screen. Let's hit it. Here we go.
Hey guys, welcome. Let me do a little bit of macro for you, a little bit of FX and cryptos. I'm going to start with one of the things which I think it's okay. So let's look the German 10-year yields. Can you Bennett please pass me a magnifying glass?
No, I can't. But you can zoom in.
Okay, so look, we are there. Okay, in terms of yields moving up in Europe.
Yep.
So
pretty
pretty
incredible. I wouldn't buy that chart.
Yeah, I mean, if you look the overall trend, and this is the trend from 1918, I've been discussing this with Todd a couple of times, and still we are trading here. If we do our magnifying glass here on charts, which luckily we can, we are still trading there in possible just a three-wave move. So there is no any of the impulsive move, and also or either a triangle here. So I will say, looking this overall chart on price, we are still holding the view, at least in Europe. Maybe in US, it's going to be a little bit of difference because of dynamics of the US economy, which is a much more vibrant currently than European one. But in general, you can take a overall look that potentially we are going to have some sideways consolidation for even a year or two, and then deflation will kick in. So definitely looking this chart, I think that at least for Europe, and we have to transfer that into United States with a little bit more uptick, I think that as long as we keep these levels, this narrative of transitory inflation, it's, I think, as we say in Serbia, holding water in my book. And I think that after it passes, we are going to go again into a higher, kind of a more powerful deflationary forces, which are above this current bottleneck supply side inflation. So let's look some of the things that we are seeing possible in these charts. I see lots of the guys are asking about gold. And gold is still unclear in my perspective. From these lows, which we in this wave count marked as a wave 4, we still didn't see a complete 5-wave move. That doesn't mean this cannot unfold, but we are testing now the lower support on this trend line. I labeled this on this wave count, this as a fourth wave of the orange wave 3, so a little bit of more back and forth before potentially we might strike one more move up. And if we see a 5-wave move, definitely gold after some type of a corrective pullback might be ready to go higher on this account. And I think Terry is tracking that very well with miners also on the rotation scans. And this will be interesting to look, especially if we have a 5-wave move. We might also digest a different minus chart and maybe start to be a little bit more bullish if this actually unfolds. Alternatively, on gold, we have also the wave count, which will prolong this fourth wave and actually which will still kind of regard this move upside as an X wave, and then look for a potential one more move down in this fourth wave. So I'm juggling between these two interpretation until I see a clear sign of this potential 5 waves up, and until I see that, I'm not going to take any firm stance where the gold might be heading. Silver is in the similar situation, so silver is also pretty much sideways. I think it's going to break up one day. I don't know if this is going to be soon. This is also subject to many interpretation of the possible patterns. We might be in an A, triangle B, up in C. We might be also in a possible kind of a bigger flat down in this B. So as long as you have such kind of a plethora of possibilities, because we all know that categories of the corrective pullbacks in the Elliott Wave methodology has its own substructures, and there is a multiple kind of a side of them, so we can have a different type actually develop. As more as this is valid, we cannot, with a certain probability, trading-wise, position ourselves on a proper side, in a sense that we have a higher probability or an edge for a possible entry. So until I see some signs that this kind of a consolidation, which I think definitely one way or the other after any type of these forms of corrections will continue higher after some time, because there is no nothing impulsive on the downside here. I'm just wondering which type of these corrections we might be and when we are going to break. So I'm pretty much watching silver, and I think definitely we are going to see higher prices from here, or a little bit lower from these corrections, whatever correction it might be. So I will be watching silver very carefully. If we get this E wave down, that will be one of the signs that potentially this triangle might be played out and complete here. And if you see a 5 wave move here, then you will have a confirmation, and you can basically kind of structure a proper risk-reward ratio.
Alex, do you have an alternate count that says that the B wave is possibly finished and we actually have already started a new impulse?
Yeah, I have it. So it's a very simple one. So this will take that we have some type of running flat here. Flats are usually 335. So if you observe move down from this A wave, it will be a 3 waves down. This is some type of a diagonal, or A up in B, down in C, or up in C actually, to form a B wave for a flat, and a diagonal move down in C wave for completion of a running flat. So this is a running flat type of the one of the type of existing flats. So you can structure this like this, put some lines here, and get a kind of a shorter B wave. But if you look the current move on the upside, if you want to anchor a completion of this correction, you have some trouble subdividing very clearly the current move up in 5 years. There is a lot of overlaps, and this
I don't
is
think
actually,
it's over for sure.
Yeah, and this is actually, it's turning me out for counting this bullish from this B wave, because this to count properly in a 5 wave move, it's very, very difficult, and I think it's impossible, because if you have this 1, 2, and then you start to try to count 5 waves, and we know, and Todd was very vocal back when I was learning from him, that you need to discern in a 3rd wave clearly a 5 wave pattern. There is no willy-nilly there is no any compromises about that. And if I do that, even by multi-wave, this is a pretty tricky thing to do, especially if you go on a smaller time frame. So I'm still kind of looking what's going on here, and trying to see in what type of correction we might be here, and is this some type of a very small 1, 2, 3, 4, 5 with a small invalidation. I will not fall for it, and that's why I'm very cautious of calling silver to be completed, because there is clearly some of the wave count invalidations here that we are seeing. So for that reason, as they say in a Shark Tank, I'm out for now. but I'm going to observe it definitely. So that's as we are seeing gold and silver. I can also look just for a second a little bit of dollar index. I'm trying to restructure some of the wave counts here on dollar index, but on a smaller time frame, and today's Fed, there is still nothing interesting. I'm still not prepared. We're basically moving sideways. I'm still not prepared to anchor this wave 2 or B here. Potentially, I will lift it a little bit more up. But we have seen also situation when dollar just retraces this much, we do a small pullback and then we continue down. So I'm very kind of keen to see this resolution. In any case, if we see that this is a beginning of a new dollar down cycle, and we see this small move on the upside, Fed stays pretty much negative on moving up on rates until 2023-24, and they kind of a signal only a 0.25% move in 2023. That might push dollar lower, and in that case, it will open also for some commodities, as we know the relation, a possible move on the upside. So I'm pretty much neutral on dollar until I see a resolution of these few possibilities here. On the other side, on the cryptos, we have been very vocal and very active. Our wave counts are unfolding pretty much nicely. And as you know, we have been warning regarding this correction for, I was looking some tweets. We were very vocal about this possible higher time frame correction to last longer. My original target was at 74K. We didn't reach that level. We retraced a little bit before. We had a small short trade and booked nice profits for a swing trading here. And I'm looking what is going on now, and we are still in a possibility to trace out a 5-way move down, which will definitely then tell us that that this correction is not over and that we are going to go up in B and possibly down in C, down to this base channel and around 21,000. We are looking some time ratios. So Bennett and Todd are on the side that this was a more of a sideways correction. In that case, they will be correct, and this is just an Elliott wave nuance in that regards, which means that this ABC can unfold a little bit quicker than I expect. For me, this was a pretty directional, so I will go with a possible WXY or a more kind of a time related correction in a Bitcoin up to the end of 2021, and then a possible further move on the upside, as long as we don't invalidate this key level here where we have wave count invalidation, which is around 14,000 to 13,701. So on a smaller time frame, we are looking this correction unfolding now. We also was vocal that this is some type of a W, a very complex X wave, and we are now in a Y wave, in a possible fourth wave still, because we didn't cross the wave 1, we didn't make the key wave count invalidation. So I'm still going to look this sequence as a possible 5-wave move, which will put in favor Todd's and Bennett's interpretation of the second wave time duration and sideways correction. I'm still looking a little bit more upside, and I'm looking, this is a very strong FIB cluster around 42, 45,000. And I'm looking to see a small confirmation on the downside, and I will be ready to short with a small risk with our members Bitcoin down to this 26, 27 levels. If we starts to confirm that this move is done. This is a very big correction, but if you notice, it's still in relation, and that's why we talk so much about this. There is definite relation between the correction in a wave 2 and a wave 4. And we are still in a time limits that we usually look for this kind of a right look between the corrections. It was a very complex corrections, and that's why we were very aggressive on the trade management. We moved our stops very quickly, and as you can see, the reversal was brutal, and it's still ongoing on the upside. So I'm still going to hold the view. We are in a longer term correction in cryptos. we are in a little bit of a crypto winter. For now, my preferred wave count is to the downside, towards these 26, 27 levels, from where I'm going to look for a corrective B pullback and a further move down to this nice support in a fourth wave channel or a base channel, which is usually very nice, and I have it very clearly displayed here. When I look these higher time frames, as you can see, this trend line is very nicely put here in a base channel, and I think it will be a perfect place for, let's say, between June, July, August, maybe even September this year, to trace out this low and start slowly to show signs we might continue on the upside. And as you know, the upsides are never brutal. They start very slow. So be patient on cryptos.
Much appreciated, Alex. Thank you guys so much. And yeah, excellent job on that recent short. Hey, if you guys are interested in staying up to date with Alex, maybe joining in, following him on the next short opportunity, we would encourage you to check us out, tradinganalysis.com. You can sign up for a trial membership, give us a test drive, stock options, as well as, of course, the world of cryptocurrency. So the markets are open here. Yeah, go ahead.
Don't forget to give us a thumbs up on the YouTube link here too. So
absolutely. If you enjoyed the content, please give it a thumbs up. It helps the crazy algorithms at YouTube know that you enjoy it and distributes it accordingly. So we do appreciate it. We would also encourage you guys to subscribe to our Trading Analysis YouTube channel. Alex has his own live show there. I'm getting ready to roll out a weekly 15 to 30 minute live show myself, where we're going to be focusing primarily on stock. So a lot of upcoming stuff here at Trading Analysis. Looking forward to it. It's going to be a fun summer. Thank you guys so much once again. Terry, Alex, excellent job.
All right. See you guys later.
Thanks.
Members, we'll see you in about 20 minutes for the webinar. And again, check us out, tradinganalysis.com. Thank you for tuning in. We apologize once again for last week, and we will see you guys same place, same time next Wednesday. Be safe. Let's see what happens in the Feds. All right, guys.
See you guys.
Take it easy. See you a little bit later. Take care.